Hello students, I hope you all are safe at home. I'm welcoming you to all for the academic year 2020-21. I'm also thankful to all the management members and the principal sir for giving us this opportunity to interact you through online lectures. So I'm welcoming you to all for the academic year 2020-21. So let the start. Okay, this is the syllabus of the third semester examination as the subject is the management accounting. So these all the four topics which we have covered as the third semester examination. The topics are there. The first topic is the basic introduction to management accounting, and the second topic is ratio analysis and the interpretation. Third topic is the working capital management, and the fourth topic is the capital budgeting. Okay, so this is the first chapter, first module means introduction to management accounting. In this chapter, we have to study the first topic is introduction to management accounting. It means meaning, nature, scope, functions, decision making process, financial accounting versus management accounting. It is totally a theoretical part. Okay, so what do you mean by the management accounting? It means management accounting is the presentation of accounting information in such a way as to assist the management in creation of policy and to day-to-day operation of an undertaking. Here are the some meanings. And next one is the nature. Nature, it means the advisory nature है, analytical in nature है, interpretations है, selective approach है. All these are the natures which we have to learn in the various lectures. And the next one is the scope. Scope means the management has to take the furtherance course of the business. It means to take the decisions is related to the past performance and it's related to taking the future performance. It means the accounting as the historical cost and the standard costing, marginal costing, budgetary control and the control accounting, statist. So all these are the covered as the scope of the management accounting. The next one is the functions. Functions, it means the functions are there. It means the data collection, the data is analyzed. Next is presentation, proper planning, controlling, reporting, coordinating and the decision makings. So all these are the theoretical part. Next one is the decision making process. In that decision making process, it means the informations which we have collect, all these informations have evaluate, then interpretation of information. In that, next is the reporting to information and the final is the controllers. Next is the financial accounting versus management accounting. Here we clear the what is the difference between the financial accounting and the management accounting. This is the first topic. This is the first chapter is related to introduction management accounting. Here totally is the theoretical concepts. And the second one is the analysis and interpretation of financial statement. In that analysis and interpretation of financial statement, here we have to see and practical problems. The practical problems is related to study of balance sheet and the income statement. So first we clear the difference between the balance sheet and the income state information. It means we know the items related to the balance sheet and the income statement. Income statement means revenue statement or the called as the profit and loss account and the trading account. But we have to prepare the balance sheet in such a way in a vertical form suitable for analysis. Not in horizontal form analysis. In an S.Y Bcom, we have learned in the balance sheet in an horizontal balance sheets and the trading profit and loss account. But in the management accounting, all the balance sheet and the income statement in prepare in the vertical form analysis. The third topic is relationship between the items in balance sheet and the revenue statement. First, clear the difference between the what are the items of the balance sheet and the income statement. So it could be easily able to solve the problems is regarding the balance sheet and the revenue statement. And the next one is tools of analysis of the financial statement. So what are the tools and the analysis of financial statement? These are the types of the financial statement. But before that, we easily make the balance sheet format and the income statement format. Then it there are the three types are there. First type is trend analysis, second type is comparative statement, and the third type is the common size statements. So these are the covered as the first topic, and the biggest introduction to management accounting, some theoretical part as well as the practical problems. This is the second module. This module is the ratio analysis and the interpretation. Ratio analysis and interpretation, it means which we learn the some formulas and calculate the ratios and calculate the some ratios. It's related to totally balance sheet and the income statement, but based on the vertical form analysis. Okay, the first ratio is balance sheet ratios. Balance sheet ratios, it means balance sheets, it means the related to the assets and the liabilities. So first ratio is the current ratio. Current ratio, it means the ratio is current assets upon current liabilities. Second ratio is the liquid ratio. Liquid ratio means liquid assets upon liquid liabilities. It's also called as the quick ratio upon quick assets upon quick liabilities. Third one is the stock working capital ratio. Here are the two terms are there. First term is stock and the another term is the working capital. So the first numerator is stock and the denominator is the working capital. So the formula is stock upon working capital into 100. Fourth ratio is the proprietary rate. Proprietary ratio. Proprietary ratio formula is proprietor fund upon total assets into 100. And the fifth ratio is the debt equity ratio. Debt equity ratio, here are the same way the two terms are there. First term is debt, so write down the numerator as debt, and the another one is the term is equity, so denominator equity there. So the ratio is debt upon equity. And the next ratio is the capital gearing ratio. Capital gearing ratio, it means the interest and the dividends is entitled to fixed rate of interest and dividends, and the capital which is not entitled to fixed rate of interest and dividends. So fixed rate of interest and dividend किनको मिलता है? किसको मिलता है? Preferential capital को, preferential holders को, and the debenture holders को, or the borrowed fund को. So formula is the preference capital plus borrowed fund upon capital which is not entitled to fixed rate of interest and dividend. So fixed rate of interest and dividend जो fixed नहीं रहता है वो शेयर होल्डर्स कौन से होते हैं? इक्विटी शेयर होल्डर्स. सो फॉर्मूला इज द प्रेफरेंस कैपिटल प्लस बोरोड फंड अपॉन इक्विटी शेयर होल्डर फंड. All these the six types ratios are covered as the balance sheet ratios. First one is current ratio, second one is the liquid ratio, third one is the stock working capital ratio, fourth one is the proprietary ratio, fifth one is the debt equity ratio, and sixth is capital gearing ratio. Now the second ratio is the revenue statement ratios. Revenue statement ratio means the ratios are related to the trading account as well as the profit and loss account. Is related to the sales. So the first ratio is the gross profit ratio. Gross profit ratio, it means profit is depend upon the sales. So the formula is gross profit upon net sales into 100. And the second ratio is the expenses ratio. So formula is expenses upon net sales into 100. There are the three types of the expenses: administrative expenses, selling expenses, and the finance expenses. So expenses upon the net sales into 100. So the third ratio is the operating ratio. Operating ratio, it means the operating cost plus cost of goods sold upon net sales into 100. Fourth one ratio is the net profit ratio and the net operating profit ratio. Here the formula is the net profit before tax upon net sales into 100, or the net profit after tax upon net sales into 100. And the last one is the stock turnover ratio. Stock turnover ratio, it means the cost of goods sold upon average stock. Average stock means opening stock plus closing stock divided by 2. All these are the six ratios are covered as the revenue statement ratio, which is called as the profit and loss account. The ratios are gross profit ratio, expenses ratio, operating ratio, net profit ratio, net operating profit ratio, and the stock turnover ratio. Okay. The third one is the combined ratio. Combined ratio means the combination of balance sheet ratio and the revenue statement ratios. Here are the combination. Combination, it means the assets and liability as well as the sales. So first ratio is the return on capital employed. Capital employed से कितना returns आ रहा है. So it is included as the long term borrowings. Second ratio is the return on proprietary fund. Proprietary fund means the proprietors. Who are the proprietors? The proprietors are the shareholders and the preference shareholders. Third ratio is the return on equity capital. Finally, the profit available to equity shareholders. And the fourth one is the dividend payout ratio. Dividend payout ratio is also same. The dividend payout ratio is also same as the profit available to equity shareholder upon dividend per share. The next ratio is the debt service ratio. Debt service ratio is related to the interest coverage ratios. Next one is the debtors turnover ratio. The debtors turnover ratio is related to the sales. Sales, it means the ratio is debtors plus bills receivable upon net credit sales. Same way the creditors is related to the purchase. So the ratio is creditors plus bills payable upon net credit purchase. So in this topic we have to learn some ratios and the formulas. Okay. Okay, this is the third module. The module is the working capital management. In this chapter, we shall study the vital aspects such as the concepts of the working capital, its importance in business activities and decision-making process and calculation of the required working capital with practical illustrations. So what do you mean by the capital? Capital means there are the two types of capital, or the every organization, commercial as well as the non-commercial, requires some amount of the fixed capital. Fixed capital like the fixed assets, for example, furniture, plant and machinery, land and building, vehicles, computers, equipments. And the working capital means there are the financing is required for the day-to-day activities is called as the working capital. And also see the nature of working capital, planning of the working capital. It's covered in the theoretical part, and some practical problems which we have to learn, and also the which we can see is the working capital requirement as the some estimation or the projection of the working capital in the case of trading companies as well as the manufacture organization. Here the third part is the C part is the operating cycle. Operating cycle, it means the first is the cash. Cash we have to purchase as the raw material, then raw material is convert to the work in progress or the semi-finished goods, then the semi-finished goods has to convert the finished goods. If the finished goods is there, then it means we have to sell the goods. Sales is there is related to the debtors, and the debtors is related to the cash as well as the credit also. Here are the operating cycle which we learn in the working capital management. It is the easiest topic, and the interesting topic are there as the working capital management. So the fourth module is the capital budgeting. Capital budgeting, it means the introduction. We have to cover the meaning of the capital budgeting. Capital budgeting means long-term investment. It refers to the planning, the development of available capital for the purpose of maximizing the long-term profitability of the firm. It is to invest the current funds most efficiently in the long-term activities in the process of identify, analyze and select the investment projects. Here I short to say that capital budgeting means the long-term investment decisions. Okay, the B part is the classification of the capital budgeting projects. Capital budgeting projects, here are the investment decisions are the first decisions are modernization decision, expansion decision, diversifications decision, independent investment proposals, replacement proposal, mutually exclusive proposals, which we have covered as this capital budgeting process. It comes into the theoretical part of the paper, theoretical part of the questions. Third one is the capital budgeting process. Capital budgeting process, in that some investment proposal opportunities organizational expectation, and the shareholders expectations related to the internal external appraisal, market analysis, financial analysis, technological analysis, economic analysis. So this is the capital budgeting process covered as the such type of the analysis are the marketing, financial, technology, and as well as the economic analysis. Same way theoretical questions. Fourth part is the D part is the capital budgeting techniques. Here we solve the practical problems as the capital budgeting techniques. There are some techniques as the capital budgeting techniques. The techniques are there. First is the payback period. Second technique is the accounting rate of return. Third technique is the net present value. And the fourth technique is the profitability index. Payback period method and the accounting rate of the return method is a traditional method. But in the modern way of the method and the considering the time value of the money, so we learned as the other techniques which we applied in the capital budgeting is the net present, profitability index, and the discounting payback period. This is the main topic which we covered as the fourth module, capital budgeting. In a short way, I said the capital budgeting it is a long-term proposals, long-term business decisions, long-term investments are there. Some theoretical part or as well as the practical problems are there. Practical problems are the types of the payback period, accounting rate of return, net present value, and the profitability index. Okay, so this is the fourth model. Okay, here the same question paper pattern which we followed in the same S.Y Bcom Accountancy and Financial Management. Same pattern paper, 100 marks, 3 hours. All the questions are compulsory, carrying the 20 marks each. In that, question number 1, objective questions. Objective questions, it means multiple choice questions, true or false, fill in the blanks and match the following. There are the 2 sets. Okay, the sub questions to be asked 12, but the answer to be 10. Okay, the marks is the 20. Question number 1 is objective questions. Question number 2, practical questions. There are the 2 questions. You have to select any one of them. Marks is 20. Same way, question number 3, practical question. 2 questions are there. You have to select and solve any one of the practical questions. Marks is 20. Fourth, same practical questions. 2 practical problems, 1 selected and solve the question, 20 marks each. And the question number 5 is theoretical questions. There are question number 5A and B theory question are there, 10 marks each. Or short notes. Short notes to be asked 6, but the answer to be 4, 20 marks. Same pattern paper, total is the 100 marks. Each questions carry the 20 marks. Okay, so this is the brief summary of the management account which we have covered in the 3rd semester examination. So we will meet you the next lecture and discuss one by one topic. Okay, till that, be safe, stay at home. Thank you.